Wall Street hits all-time high on AI surge. Markets just smashed new records. S&P 500 and Nasdaq soared today, led by explosive gains in AI-related stocks like Oracle. But here's the nuance. This rally is driven by huge institutional bets on artificial intelligence. That means it's a theme run. If AI continues to deliver real earnings growth, fine. If expectations overheat, we could see a sharp reversal. Takeaway: investors riding the AI wave need to keep one eye on valuations and the other on real business traction, not just hype. U.S. producer prices show early signs of cooling. Latest data: producer prices in the U.S. are down slightly, signaling that inflation pressures may be easing. This matters deeply for the federal cooler prices increase the odds of rate cuts later this year, and equities are reacting positively. But don't celebrate yet. One soft PPI that doesn't guarantee inflation is truly under control. Upcoming CPI and services inflation prints will confirm whether policy easing is likely or premature. Taiwan and Japan stocks surge on chip demand. Asia is roaring too. Stocks in Taiwan and Japan hit record levels, mainly driven by semiconductor and technology gains. This isn't just good news for tech investors. It confirms that the AI rally is not limited to software firms, but feeding demand for chips, servers, and industrial-scale automation. Why it matters? A broader base of AI-related strength means the rally has more stamina, but also makes it more vulnerable to supply chain shocks or semiconductor industry cycles. Gold nears all-time highs even as stocks climb. Here's an unusual signal. Gold is climbing close to record highs, even as stocks also rally. That combination suggests investors are bullish but still afraid, basically saying, I want upside, but I'm not putting all my eggs in one basket. Investor lesson: if both growth assets and safe havens rise together, it's a market driven by uncertainty. Hedging matters. Growth is exciting, but protection is smart. Bitcoin clears $110,000 resistance. Bitcoin just pushed through the $110,000 mark, riding a wave of institutional interest and renewed expectations for looser monetary policy. In short, it's responding to liquidity, sentiment, and a growing adoption narrative. Quick caution: this kind of move often comes with sharp pullbacks. If you're trading, size your position carefully. If you're holding long-term, this is a useful reminder that Bitcoin is increasingly entering mainstream finance, but volatility is still built into the DNA. Inflation expectations meet market realities. Markets today appear to be discounting a scenario of future rate cuts, yet inflation expectations and geopolitical risk are still elevated. That tension, optimism versus uncertainty, is very visible in the mixed signals from gold, equities, and crypto. Insight: this kind of market is more sensitive to surprise news. A single inflation print or a geopolitical headline could quickly shift sentiment one way or another. Staying nimble and diversified is crucial. Today's finance headlines tell a dynamic story: rapid growth fueled by AI and tech themes, cautious optimism around inflation, and renewed momentum in both crypto and safe haven assets. But the undercurrent is uncertainty. Markets are riding liquidity and big bets, and one wrong signal could trigger sharp reversals. If there's one consistent theme today, it's this: fast growth is exciting, but smart investing is about balance. Shorts for fun, longs for strategy, and always keep an eye on what might go wrong while chasing what can go right.